No. Cool. Hey everyone, how are y'all doing? Just testing the live until the guest hop on. If y'all have any questions, feel free to ask them. Me personally, you guys stand. Nice to start off the live with a troll. True, true. Alright, let's see. Yep. Is the music good or do I need to turn it down or off? Hey, Financial Dabber. Music's good, cool. Awesome. Yeah, so just make sure everything's good until it kicks off around 7. Yeah, if y'all have any questions, feel free to ask until everyone joins. My guests, so I have about 4 guests today. I have Imran, a budgeter and a CPA coming on. Oh, and a real estate agent. So trying to get a good variety of financial knowledge. Yeah. Go ahead and send out the invites. Let's see. There we go. Financial Dive, do you have 1,000 followers? No. Close. There we go. Hey, Lewis. Yeah, just waiting on some of the guests. Actually, if you want, if you have time, I'll send you an invite until the everyone shows up. No, definitely. I'll make sure to get you on one of the next ones. Oh, I appreciate all the gifts. Thank you. Yeah, I mean, while we're waiting, if y'all have any questions, how am I doing? Pretty average day. Nothing too crazy. Let's see, what did I do that was fun? I started making my own tea, and that was interesting. I think it came out good, but I definitely need to twinker with it a little bit. Yeah, then I thought I'd try and look all nice for everyone on the interwebs, shaved, got a haircut, all that. So I don't know. I don't think my buzz. I don't think she went short enough. No, this is probably my um, fifth or sixth. I just don't go live too often. Up here's Nerd Finance.
Hey,
Hey, how's it going?
It's going good.
Oh, I think it's
So if you want, we can keep it like this, or you can go live and I can invite you as a co-host.
okay. I will go live then, and then I'll catch you here as a co-host. All right.
Sounds good.
Take it easy.
Same with you, Enron. If you go live, I'll invite you as a co-host. Let's see. Okay, yeah. Let me know if it works and if not. Let's see. Hey, JB. Let's see if I can change the. Okay.
Howdy.
Nice.
So
Alright.
nice to meet you,
Right,
Jonathan.
yeah, it's good to see you. Let's see if we can get Imran on here.
Oh, Imran will be joining us. I met him before too.
He's trying to, I think, do it from his laptop, and it's a little difficult, like the settings.
Yeah, I don't hop on live like through co-hosting too often. Usually I do it through invite guests. Could you do it with multiple people? Like
Yeah, you can do the co-live, but it's 4 people maximum.
four people max. Okay. That's cool. I didn't know that was the case. So that's tight.
I just prefer it because you have more screen space, and you don't get a bunch of invites unless you know the person.
Oh, okay. So that's how that works. Interesting. I love how my screen is smaller now. So it actually is the right amount of spacing. Whereas before it's like kind of blown up and the bottom is like you can't see it. When it's this way,
Yep.
at least you can now see the bottom. So and the comments are like unaffected. So if it's split four ways, do we just get smaller? Is that
Yeah, we shrink down. Now, the only thing I do not remember is if you can see my comments or if you're only seeing your comments.
well? Can people make a comment right now? Because I haven't seen a single comment yet. There's 189 people, over 200 now, but yet I haven't seen a single comment. So I don't know. I don't know if I can see comments or if we see them together.
Good.
Are you seeing comments? I saw one comment from Thomas Goodwin. Or did you see anything?
No, so it must be separate comments then.
Separate. Must be separate. Okay. Well, fair enough. We're waiting on Imran, who will be joining us. He's a Fang Tech person that retired, or like not retired, but like quit, and is now pursuing becoming an influencer full time. But I've never met you, so I haven't heard about your background as of yet. You want to give a little
Mine,
bit of
yeah, we'll do intros in a second, but I mean, for short, I'm just pretty much, I work as a family restaurant, I do property management and then investments.
restaurant? You what do you do at the restaurant? And for property management, what kind of property do you manage?
So at the restaurant, it's more of, I'd say I'm more of like kitchen prep and behind the scenes, make sure all the products get there and everything.
Okay,
And
I got it.
then with property management, it's more of just a couple of houses like rentals that I manage, and it's nothing crazy, but it's a good little like if something goes wrong or to make sure tenants are happy.
Hmm. Oh, okay. And are these units, are they big, or are they like, is it like how many units is one of the properties that you're managing?
Well, they're more like think more like homes, so they're more 3 bed, 2 bath.
Oh, I understand. I understand. So how many of those are you managing?
We're at about like 12 right now.
I see. 12, 12. Okay. So budding. Okay, that makes sense. And for investments, what do you invest in?
So I'd all invest in personal stock and that portfolio stuff. But
Okay. So individual stocks or ETFs, which
I do a little bit of everything. So the bulk of my money is in ETFs,
Mhm.
and then I also have some individual stocks and some stocks for different reasons like dividends and other cash flowing to keep more of it like constant income other than just the job.
Gotcha. Okay. That makes sense. Um and well, are you trying to get big in the influencer space?
Um, a little bit. It's more I'm trying to educate and teach more than just grow my self brand and all that
Mhm.
jazz.
I see. And what type of content do you make? Is it investing content, that kind of thing?
Yes.
Okay. Very cool. Yeah,
But I'm more focused on like people starting. So your whole budget to um, starting a brokerage to beginning your Roth IRA to
mm,
paying off debt, and then if you get a grasp on that, we can kind of go into okay, why would you look at certain companies if you want to look at them? So it's more of a PE approach versus a lot of people on here are just all about technical analysis and buy this because of a pattern, and I just don't think that's as helpful.
yeah, yeah. I don't trade either. I'm invested in 40 individual stocks, roughly 40, somewhere between
Mhm.
35 to 40. And I don't I do look at PE, but that's one metric. I look mostly at EV to FCF. But that's just a snapshot. PE, EV, FCF, that's a snapshot in time. Um, I focus on the consistency of the profits, like how much they've grown over a long time horizon, and how variable they are. And based off of that, I'm willing to pay a certain multiple. So that's kind of how my thought process when I invest in individual stocks. But
Yeah.
I how I started was like I analyzed maybe 750 companies. And then from there, I narrowed it to roughly 200. And then from those 200, I pick about 40 of them that are cheaper, relatively cheaper. So that's kind of like my thought process on how I invest.
I gotcha. Hey Imran, were you able to get it or did it not work? So let's see. I can see if I can send you an invite, but for it to go this way, I know you would have to personally go live and then I can add you. Yeah, cool.
There's another guy. I was looking at friends I know that are on Nick Nemeth. I've never met him, but he posts like interesting content, sells side reports from Bank of America and goes over it. Have you heard of him?
Yeah, so Nick, he's a good guy, but
Oh,
he's more in the real estate game, and he's done. He recently started the whole Grant Cardone, stuff like that.
oh, I see. Gordox is here too. That guy is, I think he's worth a couple mil.
Oh,
So we
nice.
got some rich people on the live right now.
Let's see. Hmm. I don't know why it's been as difficult.
Oh, 5 to 10 range. Five, sorry, Gordox is in the 5 million to 10 million range.
Oh, wow.
Uh, yeah, in the business of restaurants, right? If I recall, you had like several restaurants, but going up fast. If only I had that money.
Yeah. No, when it gets to that point, it just becomes you're living on the 4% rule.
Yeah, I mean, I don't need 4%. I could probably get by with 3% of that.
Yeah, no, it's true.
Right?
That's a crazy thing. I don't know if you did it on one of your lives, but the report on lifestyle creep.
Hmm.
It's crazy just how many people, whenever they make a certain amount of money and they view their account as they've made it, but they're still living paycheck to paycheck.
Yeah, I mean, there's a stat that's out there that half of the people who make 100K a year. So first of all, to make over 100K a year, you're in like the top 30%, something like that. 30%. And of the people who in the top 30%, 50% of them, uh, of the people who make over 100K, 50% of them still can't pay their bills. They live paycheck to paycheck. So it's just, if those guys are screwed, isn't everyone? So that's like the main
Yeah.
takeaway. This one, the guy who has 5 to 10 million is like, I spent at least 300,000 on watches last year.
Sure. So he's a collector then.
Yeah, I mean, those things don't fall in value. I think they appreciate. So, but I mean, they don't appreciate that fast. So he does it as a passion. I'm sure he does not do it as an investment.
Yeah.
But he gives me the vibe of he's like Drake, 25 sitting on 25 mil.
No, it's crazy some of those things that I don't really view them as assets, but if you get to a certain high enough status, they
Mhm.
become assets like watches, vehicles, um certain other toys start becoming assets over a certain price range.
Yeah, I mean, art. I don't touch that kind of stuff. Art, watch that kind of thing. Even I don't care if they appreciate. Mostly, what I care about is if it, generates cash flow. Do people pay money to see it? If they do, then
Yeah.
it's a cash flowing item. But 1 mil. So we got a person who has 1 million in inheritance and didn't earn it at all. Hey yo, a mill's a mill, dude. You're a millionaire still.
Yeah.
Take the W. Don't like beat yourself up. But I'm glad that this guy is like, he recognizes he's a trust fund baby, but he's okay with it. He's like, I didn't earn it at all. So he's very upfront about
Yeah.
it. You the man, Mike. Most people would not even just like attribute it to their own personal success, but you admitted that it just fell in your lap.
So I'll be right back. I'm gonna see if some of the other people got the invites or what's happening.
Mm-hmm. Gotcha. No worries. Well, guys, been chilling for a cool minute. I'm cooking some lasagna, believe it or not. My cousin is over, and he's helping me cook my lasagna because I don't know how to cook and use the oven. So now I'm just waiting on it. It's a little hot in my house. I think it's kind of a mistake to be cooking lasagna. And I just didn't realize it till now that when you use an oven, it heats up your house. So, there's some things that I don't know what to do. I can, look at a company, tell you its business model, tell you how much it earns, tell you how its growth, tell you if it's cyclical, tell you, whatever the business model states in the 10K, summarize that. But I don't know how to use an oven. So
We all have our skills.
different strokes for different folks. That's all it is.
Yep.
Oh, Imran is on now.
Oh, he is cool. There we go.
Oh my gosh, finally.
Howdy,
Yeah, the
Imran.
desktop app was just not working, so I gave up.
Oh man,
What's going on?
not too much. Just
I can't
enjoying.
even.
It's really nice weather down here, so enjoying the day.
Nice. I can't even see Nerd Finance. His picture's like cut off.
Oh, really?
There you are.
I'll cover the data. But
How's it going?
pretty good. I went for a run. Then my wife, who works part-time, left. My cousin is here, and we're cooking some lasagna. So that's about it.
Nice.
How about yourself?
Let's see. Was editing videos today. Got some boba, and
Nice.
that's it. Yeah, just chilling.
Where are you based again? Sorry, you
Seattle.
said boba. Sorry?
Seattle.
Oh, Seattle. You said boba, and I was like, are you from the OC, bro? Like, are we close?
I'm from Southern California, but I moved up here maybe 4 or 5 years ago.
Right, right. Are you gonna stay there? Or are you gonna book it? Like, are you gonna leave it for another place?
I love it up here. It's awesome.
Gotcha.
Yeah. Well, where are you at?
LA, Gardena
Ah,
specifically.
Gardena. Okay.
I used to live in, so I grew up in Torrance, but I lived in La Palma, which is next to Cerritos. Like, I bought a house there, sold it,
Oh,
and now I'm in Gardena renting while I'm, still at school.
right on.
Yeah.
How you like it?
Pretty good. Like, school's super easy. Like, I mean, US. I don't know if it's USC that's just easier, but like when I was at UCLA, it felt harder. But I was also younger and a lot dumber. So like, it's not an apples to apples comparison. So,
Gotcha.
but
So also more of the courses, or
I mean, it's the same. Like when I was an econ major, so I was still taking hard courses. But I don't know. It feels easier now. But again, keep in mind, like when I attended UCLA, I didn't take the CFA exams yet, so I wasn't like a good test taker. But like post CFA exams, I'm basically like a test taking king. So like doing the MBA is much easier because I know how to like do tests properly or study for them. So it's
Yeah.
different.
No, and from what I hear, the for accounting and all that, the what is it, CFA or CPA, whatever the acronym is, it's a whole different animal.
There's someone in my comment section is saying, "What should I do with the 200K cash I have coming?" We don't give financial advice over here, even though I was licensed before to give advice, but you know, you're not supposed to give advice. I try not to.
Well, what would you do with $100,000 right now if it were you?
I have $100,000 right now in cash, but I need it because I need it for liquidity. Like I don't know him. I don't know like what he needs. My needs are I got tuition, right? I gotta have enough money because I'm unemployed. So like I gotta have enough money in the bank. So I need to have that 100K sitting around just in case, you know?
Yeah.
So he's saying he's thinking real estate. I don't want to do any more businesses. Someone says I work at GS and everyone always asks me those questions.
Yeah.
What's
You work at Goldman Sachs. So, like he's like, yeah, I work at Goldman Sachs, but I'm just like like imagine if you had a low level job and it was just like, oh, I'm just the admin assistant there, but everyone asks for my opinion. I'm sure he's not. I'm sure he's like higher up in GS. But yeah, it's always I don't know. When you work in the industry, people just like kind of ask you what they should do with their money, and it's like, if it's friends or family, like I just give it nilly willy. Like I try to. You're not supposed to do that, but whatever.
Yeah. If it's mom, I'm gonna give it. Sue me. Sue me.
If
I'm
I
gonna
feel
do
like
it.
you're gonna sue me, I'm not gonna give it.
Yeah.
Yeah.
That's really where.
Yeah.
Like, do I know you? Are you chill? Okay, I'll help you out. That's really it.
Yeah. Yeah. Pretty much every day. Hey man, I got 10 grand. What should I do?
Do you do like calls with people? Like, do you set up calls? No, you don't do that.
No.
I was thinking because do you guys know Honest Personal Finance?
I think so.
He's the angry guy. He's always angry. Like,
Do you have glasses?
yeah, glasses.
Okay.
Yeah. Okay, so
Okay.
he created his own website, and I was like, oh, that's smart. I should create my own website. Like we have this platform, like why don't we create a website, right? Like that would be the smart way. And then you could create your own newsletter. You can like you have access to getting your name out there. So
Yeah.
do you have a website? No?
No, I started a newsletter like a couple weeks ago on Substack.
Okay. What do you write about?
Just various personal finance topics. I did like a traditional IRA, budgeting, just random topics like that.
Do you
So
I know I feel like
speaking on school and writing about financial topics. So have you looked into the new 529 rule that they're implementing?
have they implemented it or is it still being discussed?
I think they implemented the one that you can roll it over into your retirement.
Roll
Roth.
it over into
So like it's 521, 529 is used just for education.
right.
But after your education, whenever you reach like the Roth IRA retirement age, 69 and a half, you can use your 529 money tax free.
For personal expenses?
Yeah.
That's weird.
It's no longer just for education.
Yeah,
That's
I
so
think
weird.
they're allowing conversions, part of it, to a Roth. I think that's what it is. I don't know if it's actually implemented. It's already set. Like they're for sure going to do it, but I don't know if it's live. I don't know if it's actually if you can do it now. But for the longest time, the 529, the problem was it's like, what if you don't go to college? It's like, well, right. So it's kind of almost useless. So now they're trying to make it a little more useful.
So 529s, you could use it for education expenses, not just yours. You could do it for others too. So it could be your kids,
Oh,
your grandkids, random people you don't care about. Like you could, but from what my understanding is, you can put like close to like a ridiculous amount, an unlimited amount almost. So if they're doing that, wouldn't some rich guy just drop everything into a 529 and then roll it over to a Roth at the very end?
so
And
they're
then
Well,
limiting the amount. I think it's like
yeah.
a certain amount total right now.
Oh, okay, that makes sense. Because
Yeah.
honestly, if they didn't like cap it, I'd be like, this is the dumbest thing I've ever heard. Like,
Yeah. Total
who are
hack.
these guys?
Yeah.
Um, okay, so that's what they're doing. Pre-tax. Are they still giving the pre-tax deduction at the federal level, or is it post-tax only? Like, how's that?
Well,
I am not positive on that.
is a 529 pre-tax contributions or tax deductible contributions? I forget.
It's pre-tax at the federal level, state level. It could vary.
So then if you convert to a Roth,
Yeah.
would you have to pay taxes?
That's what I'm saying. Well, I mean,
Okay.
they're capping it at the very least, so at least it's like not where you can, be a douche about it and just shove everything in there, turn it to a Roth, super backdoor mega Roth like that. They're gonna have to come up with a different name. They already have like backdoor Roth, mega backdoor Roth, super duper mega
Ultra.
duper. Like it's.
Did you guys play Halo back in the day?
Oh no, not I.
Oh yeah.
When you get a certain amount of kills, they're like ultra kill, mega kill, and they have these like crazy words.
Oh, I played Dota 2, so that yeah, they did the same thing.
Oh, they have that? Okay.
Do you use an advisor? Do you guys use Wealthfront? Or like any
No,
other?
I tried them out for a little bit, just only because they sponsored me for a couple of videos.
Yeah.
But they didn't have a whole lot of account features like compared to SoFi. But they were cool
Okay.
for what it was worth.
So, dude, SoFi lent me money at 2.5 student loans at 2.5%.
Wow.
Yeah, I was like, dude.
How much did they give you?
It's not just them. Okay, SoFi did it. Another company did it. PNC did it. So people just lent me like really cheap rates, fixed rates, huh? So, I don't know. In my head, I was like, who's dumb enough to loan at these outrageous rates? But so SoFi is cool though. Like I saw their app. It seemed pretty interesting. They're like having like student loans, checking, mortgage, all that stuff, all in one spot. I kind of like it.
Yes, definitely. Are you spread across like many different accounts right now?
No, there's 3 primary accounts I use, and it's a matter of like where my station in life was. When I first started, Vanguard was the leader, and I was just using their Roth, right? Then over time, I started to use like Fidelity's features because it could be like a bank as well as a brokerage where you have like a cash management account. I have a credit card with them that gets 2% cash back. So, I had an IRA, checking account, and a brokerage account with Fidelity. Then that went on for a while, and I rolled over my 401k there. But then now, when I got married, I needed to create post-marital assets, and I had like a lot of taxable money, so I just shoved that in like an M1 Finance account. And of the 3, I'm really loving the M1 Finance because it's like automatic. I like things where I could be like completely hands off and it just takes care of itself. You know what I mean? Like,
Yeah.
I remember back in the day with Vanguard, with mutual funds. Back then, it used to be mutual funds, right? Not ETFs. And you deposit money and it's automatically invested, right? That's what M1 is now. So that's why I like it. Vanguard made sure that everyone who was under that kind of thing, where it's like automatic invested, had to switch to an like a brokerage, in which case you have to do a trade order every time. So less automation. And I like things that make my life simpler, like where I don't have to think. It's automatic. It's extra money deposited, automatically invested.
Yeah,
So
you're done.
yeah, so that's
Go and enjoy life.
exactly. And they had some cool features, like um, some of their credit cards give me 5 to 10% cash back, depending on the place I spend it. So, but I don't do it for that. I literally just do it for the automatic investing, the ability to write checks to people, where like I just tell them to write a check on online, and then they write a check for me and send it out to them. So
Nice.
yeah, so those are the cool features I like, and they have a credit card, so I like that aspect. So it's the things I like is like all in one. I want a place where I can put all my assets in one place and manage it all. Makes things simpler. How about you? Where do you use?
So a mix of Vanguard. Vanguard has my Roth IRA.
Hmm.
Fidelity has a 401k. I'll probably roll that over. Um, and then I recently moved my brokerage from Robinhood to SoFi. Got a nice little transfer bonus there.
Oh, nice.
Um, and so I'm trying to. I think I'm going to hone in on SoFi because they got everything, man. Just like you were saying, it'd be nice just to have everything in one place.
Yeah.
Um,
Well, SoFi is kind of scary though. Like, aren't they trading at a $5 price right now? Like the stock. I don't know why, but to me, anything that trades below $10 is like penny stock level. Like,
So I do think SoFi got a little caught up in that student loan drama because they offer the student loan stuff.
yeah,
yeah,
anyone who offered low rates are kind of crazy, in my opinion. I mean, that's what happened to SIVB. Like, they had like
Yeah.
maybe 100 billion that was lent out at like 2.5%, 3%, basically sub rates, and then rates rose.
yeah,
And they act like bonds, higher rates, lower value. They lost all their equity in there. I don't know. Is SoFi? I don't know if SoFi is going through that same issue because a lot of if you take deposits, then you obviously have to deploy those deposits, and you're subject to interest risk. So,
yeah.
but I mean, I like how how their tech looks. Like, it's very cool. It kind of reminds me of M1. I've seen it. So
Yeah, I hear good things about M1.
yeah, simple, simple. I
Yeah.
like it. Fidelity actually has nice performance trackers. They have a good screener. I love their screener. Vanguard's just trash. Like,
Vanguard is like the
No.
most fragmented website I've ever seen.
oh my
It's
god.
all over the place.
Okay, back
My
then
gosh.
their value add was like they were free, they were cheap. Like, I loved Vanguard, but then
Yeah.
now everyone's free, and they haven't innovated. Like,
No. I think what's going on is they have a lot of old people using them. And I used to work in IT. And if you change one little thing for old people, they lose their minds.
but they could at least
So,
try some. Like, Fidelity is at least trying. They're trying to compete with M1. They're
yeah.
doing all sorts of, like, they have like Fidelity Go. Like, I don't even for Fidelity they're coming up with so much crap. I don't even know half the stuff they're coming out with. So they're not doing a good job explaining it. But
Uh,
Vanguard's just happy with whatever they have, and they're not offering any added value. Eh, I get it. Their ETFs are cheap, but like, you could buy that ETF from any brokerage. Like,
yeah.
I'm not beholden to like stay with you just because you're the creator of the ETF product.
Yeah.
That's the whole
There's no
thing that
loyalty here.
Fidelity is trying to do. Because they're offering so many other new services, they're able to keep their zero fee ETFs.
I mean, whether it's zero fee or 5 basis points,
Yeah.
it's all like pretty close to nothing. Like, how much do you think they manage? Maybe, I don't know. I actually don't know.
Vanguard or Fidelity?
Fidelity, like their ETF specifically, not their AUM, right? So just the amount of,
Well, I think total it's over a trillion for sure.
okay.
Fidelity. I don't know about Vanguard or just specifically ETFs.
Okay. Well, if we did 1%, of 1 trillion, that's roughly 10 billion, right?
Yeah.
And then you have to take 1% of that to get to 1 basis point. So that's, I don't know, I guess 100 million, and then multiply it by 5. So roughly 500 million in revenues from their ETF product. That
Great math. I can't do that in my head.
yeah. But 500 million is still a lot of money. I guess that's what I was trying to say. I kept on like, it's basically nothing. But then once I did that math, I was like, okay, it's 500 million. That's actually kind of nice still. That's
Yeah.
Yeah,
nice
and that's
profile.
just a sub part. So
Make my face bigger here for no good reason.
yeah.
Oh, anyways.
Oh,
There we go. Woo!
Nice.
I can see you. Oh
um,
man. Any questions, people in the chat? We have not been interacting. We're doing a really crappy job with that.
Yeah.
What's going on
Yeah,
with y'all?
sorry. With this, we all have our own chat.
I hate how that is. How do we merge? Is it just because you invited us while we were going live?
Yes. So I did that so you don't have like it's easier on my end because you don't have constant people trying to request invites and all the other hoopla. It's more you can focus on just kind of the individuals who are in it. And also the screen size is a little different. But if it's easier on y'all, we can go back and make it just one chat.
We can do it next time. I think we've gone too far.
Yeah.
someone is
So yeah,
asking.
I'm gonna check on Nick real quick and what
Yeah,
he's
go ahead.
doing, but if not, we can go ahead and start pretty much.
Oh, I thought we already started.
Yeah. Someone in my live is asking prediction for the S&P 500. What do you think?
Short term, long term?
Oh,
Both?
I don't know. You got to clarify, Zhao Dong.
Let's talk about short term. Hopefully it crashes hard this year. Hopefully. Hopefully we go into Huh?
Are you in cash or?
I do have cash, but part of it, like you were saying, you're unemployed right now, so you're hoarding some cash.
Yeah.
I'm self-employed, I guess you can call it that, but I still have a lot of cash because I don't know what's going to happen.
I gotcha.
But part of that cash is just ready to deploy. Something crazy happens.
I mean,
We're
worst
ready.
case, you're getting your like 5% treasury bill, right? So it's like
Exactly.
it doesn't really matter.
Yep. Very true.
So if there was a time to sit on cash, now is kind of a good time. Markets have kind of roared back up. I don't like to predict where markets go. I react to where markets are. That's really like do. So like if the risk-free rate, let's pretend the risk-free rate was 12%. Basically the T-bills are 12%. Then I'd be in a ton of cash, right? So it's just, I do what the market offers me. I don't predict where it's going. I just know how things can play out. Like if you're looking at the S&P 500, we're down roughly 12%. So from the peak, so that just means that, from what's the appreciation from 100 to 88? Probably like a 14% gain. So that your potential of it recovering to its original price is probably like, let's just say 15% upside, or I can just collect the cool, 5%. Like, what's the difference between the three if we're talking about short term? But that's pretty much it. Someone said S&P has gone up 17%, and technically that is a bull market sign. But yeah, the markets fell a lot, right? So like you're saying that it's up 17% from the market tro, which was we were down 25% from the peak very recently, right? Like in 2022, I think we had like a 25% downturn. So naturally, you're going to get a high 17% gain, but we're still basically, that's why I like to refer to things as like from the peak of the market, we're 12% cheaper, which isn't a screaming sale, but it's a discount.
Nice.
Yeah.
Yeah, no, and I think that's the problem too, is most people look at everything from a um, extreme all-time value or bottom trough evaluation and what's going to move based on that. It's like, sure, we may be right now 35% from where we were bottom, but it's kind of like, how does that relate to our, 2018 top?
Yeah. To 2008 bottom, we're up a lot. We're up, I'd say probably somewhere between 220% to 350%. I don't know because I'm not looking at the numbers, but it's somewhere around there. I know in the last 10 years, we're up 220% though. Total return.
You said 10 years?
10 years, yeah. I know because I saw it recently. So that I don't like do these calculations. I just know it in my head because I did it recently.
And isn't it like every decade we're roughly doubling?
So there's this thing called rule of 72, and you basically take 72 and you divide it by your rate of return. The average rate of return in the S&P 500 has been 10%. So if you take that 10%, divide 72 by that 10%, you get 7.2. That's the amount it takes to double, 7.2 years.
Okay.
Yeah. Easy. Those are the, what do you call them? I don't know, like rule of thumb. Rule of fingers.
Napkin math, the rule of thumbs.
Yeah.
A lot of those.
Even the 4% rule that you mentioned earlier, Jonathan, that's a rule of thumb kind of rule, right?
Yeah.
It's easier to just say multiply your cost of living by 25. Like that's 4%,
So based on that, I know I'm getting one or two comments. Do you think it's going to be a lost decade? Like just basically a flat, not too much upside, not too much downside, but pretty much a flat S&P 500.
S&P 500 actually behaves that way. If you look at the long-term data, and you kind of like apply like a logarithm on it, what you'll see is like it goes up, it goes flat, it goes up, it goes flat, and it's like those flat years are like, like not necessarily a decade long, but close, right?
Yeah.
Where it just doesn't do anything for 10 years, then it shoots up, and we're at the point where it shot up. So realistically, you could say that we may enter a time where things are flat and things don't move, but actually, those are the best times to get rich, right? Yep. The reason why I'm sitting on like 700K today is because, when I was investing, when I started my journey, it was during the flat stage, right? So I was able to accrue assets when things were like not really rising fast. Mm-hmm. And then obviously the rise up kind of took me up. But you build basically your net worth when things are kind of not moving, when they're down a lot. That's where you become wealthy because you're buying these assets at the cheap. You feel good when it goes up, but you didn't get rich because it went up. You got rich because you bought it when it was down. So that's really how to think about it.
Right. And if you look at the data, you'll see that in any like 10-year given period, you literally never lost money in the S&P, right?
I had the data set for that. I use Shiller's data. So, Shiller's data has like 150 years. You do still lose money at some points in time over 10 years. You begin to not lose any money in the 15-year time frame. And I think the lowest is a 2% gain, or maybe that's 20-year. I don't know, but it's one of those. You're right in one of those.
So you were looking at over 100 years?
The data goes from 1880 to like, I did it in 2013, but I'm sure that the percentages are still going to be roughly the same. Like there's nothing in the last 10 years that's happened so odd. Oh, there is one thing. You know, when COVID hit and the market crashed 35% in 1 month, that was never seen ever. That was basically the worst month to ever happen. We've never seen a 35% drop that recovered so quickly. So that was mind shattering. That's something new that people don't know. I didn't. Well, so at the very bottom of the market, I think it was 2020. I started out with 420,000, and then I lost my money. Like I lost like 100K and was down to 320K at the market bottom. But I had like 10 G's left in cash, and I was gonna buy again. And my wife told me that you're just gambling. You've been buying all the way down, and I was like, "But this is what you do." And she's like, "No,
DCA, baby."
Yeah. So like she was like panicking, and then I was just like, I didn't make that last purchase. And that was the market bottom. That same day, which was
you gotta stick with that plan.
But it was, dude, 10,000 isn't gonna make like a huge effect. You know, like I was literally buying on the way down. Like I think the amount of cash I had on hand, because again, I started with 420, I lost 100K. That's roughly like a 25% downside. Markets fell 35%, so I beat the market by like 10% on the downside. So I still outperformed because I didn't make the purchase at the top. I purchased it on the way down. So even though like I skipped out on that last 10K, I still did better than most. So I'm okay with it.
You're supposed to buy low, sell high.
How do you differentiate between buying at those certain levels and your falling knife?
Oh, falling knives. I specialize in falling knives. The reason why is because I measure companies based on their consistency. So I know when companies are consistent. Now, every now and then you'll have a company who'll say that, you know, they ran into some dry spell and that they're forecasting crappier earnings for the next year. They do something like that, the stock crumbles, falls 50%, something like that. I catch those. I look at the multiples. I buy them when they're relatively cheap. Now I know the companies have consistent profits and they've just had like temporary weakness, and they can be awful for a little bit, but in the long run, I always beat them. And so like one example I did was like Apple in 2016. They started raising prices on their Apple device, and they were afraid that volume was going to drop. Volume did drop. And so the Apple prices, and they stopped reporting the amount that they were selling. So the Apple shares dropped, I don't know, maybe 40%. And it was selling at a 10x multiple. And they were saying that Apple was no longer going to grow. And then I was just like, you know what? I'm going to take a chance. Bought it. That stock's up 700% from that day. So, and it's not the only one that I've done. I've done it with even energy companies. I don't usually buy energy companies, but this one was an oil company that collected royalties. And I bought it when the share prices of oil was negative. So I know that they didn't have any like operational expenditures because they're just collecting royalties. So I didn't have exposure of them. Anyways, I bought that company when it was like $400. That thing crashed all the way to 300, but now it's at 1600. So I made a ton of money. I sold on the way up, obviously. I sold at 800, 1200, 1600. I'm not completely out, but I only have like 8K on it. But literally, I had it in my Roth. I bought it in my Roth IRA. So, you know, when you buy your Roth, you're making a big bet. You're making a huge bet because on the downside in a Roth IRA, you don't get a tax deduction. You lose money, you're done. Like you put after tax money and you lost money and you don't get a deduction. So it was a big moment for me. And I lost money initially. And I was like, oh man, it looks like oil's going bust. But then it rose. And so like I took $10,000 in a Roth and it was like 50,000 by the end of it. And now I kind of sold and diversified it. So now that 10,000 in the Roth is like $80,000 today. And that was like, I don't know, in the span of 3 years.
That is some risky stuff, man.
That is risky stuff. Well, it's not really that risky because at the time my net worth was maybe 400K. So it's just a $10,000 bet. It's a very small amount of my portfolio.
I
It
see.
just grew really fast, and as it grew, I did sell. Right. So when I bought it at 400, it went up to 800, and I was selling as it went up. And
How
now
much?
it's
So your
huh?
Roth had 400 in it? How much did your Roth have at the time?
Um, Probably 30,000. So 30,000, but 10,000 was placed on that one bet. But that one 10,000 went all the way to 50K by itself.
Oh, okay.
Yeah.
Gotcha.
And then I diversified it. So now it's still has only like 10,000 today, but obviously it's 5X. And the other stuff I just diversified it to other companies. Then they've been doing well. So now I have like maybe 80 to 90K in my Roth, but it only had 30K 3 years ago. That's the bottom line. Like,
Yeah.
so
Nice.
Roth IRA are like the big things. It's funny because that Roth IRA, I kept it in cash going into COVID. Like it was all in cash. I didn't utilize it. And there's a saying that you lose more money anticipating a market crash than the actual crash itself. And it's true because I kept my Roth in cash because I just wanted to hold it for my like high conviction. So I learned that. I learned something tonight, not try to time the market and just, be fully invested moving forward because I'm young and
Yeah.
though I'm not earning now, I will earn when I graduate. So,
Well, that's the
but
whole thing
It's a good
too.
lesson learned.
huh?
I can't get behind all these bear analysis out there of just, oh, it's going to go lower based on these metrics. It's like, well, in the meantime, you're just sitting on cash and it's going to depreciate. And sure, you may catch a bottom, but it's like, why are you trying to be so adamant about that exact number?
I think
Right.
we're in a interesting time. I don't think we see this very often, right? Especially now with the pandemic. So normally I would never hoard this much cash ever, but we're in a really unique spot and we may not see something like this for a while.
Yeah, yeah. I mean, the yields for the risk-free rate is pretty high. So the benefits, it's not that bad of a deal, in my opinion. Now I
I
don't.
mean,
I'm actually levered. I owe more debt than the cash on hand. So in fact, like my borrowed money is essentially the cash I hold, like for safety, right? Uh, the way that I explain it is like I have 120K in student loans, but only have 100K in cash. So what that tells you is that I basically borrowed money, which affected my solvency to make sure that I have liquidity. So I have cash on hand today. So if I have bills that comes, I have money on deck for them, and I'm doing it at a 2% rate, which is fine. Because what the last thing you want is where you need money for things because you got laid off, because you got a big bill that you need to pay, and you don't have cash on hand. And then when you go borrow money today, I can't borrow money at 2.5% anymore. If I go to a student loan person, the lowest rate that I was quoted was 6% today. So it's a good thing I borrowed before.
And treasury bills are what, 5%, 5.5?
Sorry?
And treasury bills are what, 5.5 right now or so?
5.5. Yeah.
yeah.
Yeah. So yeah, I checked when rates were rising to where they are today. So like I'm sure the student loan bills are probably north of 7% now, if I had to guess. So yeah, you're right. If T bills are 5%, they usually there's a net interest margin. Net interest margin is usually a couple percent. So I'd say that student loans are probably at a 7% rate, which is pari passu to kind of the same thing as the rates for the Federal Reserve. I think student loans from the Federal Reserve, from the government, 6 to 7%. So
Makes sense.
Mm-hmm.
So with that stagnant cat, do you try and implement different vehicles like whether it be CDs or I-bonds or different like anything like that, or do you just pretty much do your debt ratio?
Do you use it, Imran? Like those kinds of stuff? Yeah, I don't
Nope.
either.
Nope.
What was your reasoning? I'm curious.
So I don't use CDs because high yield savings are about the same. You're gonna get like 5%, right? CDs are what, 5.2, 5.5? It's like, why lock it up when, you can have that extra liquidity with the high yield savings? Same for I bonds. What the max is, what, 10K per year?
What a headache.
Yeah, and even then, the gains you'd make on the percentage are like almost negligible, right? So it's kind of just like, so that big of a difference.
So the reason why I didn't do I bonds, like back then they were yielding 9% interest rate. People in my MBA program were talking about it like nonstop. But I knew that it was like kind of tied to inflation and like the fixed rate aspect. And that 9% rate then is now at a 5% rate today, which is lower than the T-bill currently. So now a lot of people who bought at that time are thinking of selling it. So they just caused themselves a headache thinking of whether they should invest in this $10,000 thing that has an adjustable rate attached to it that's fallen a lot. So I was like, 10K is not worth my time over something that isn't really, going to grow. It's going to grow at the rate of inflation, but inflation typically is never that high. So that's why I didn't do it. For CDs, you mentioned that you're kind of locked into it. That is the case for most traditional CDs, but you can actually buy CDs from brokerages, and those are highly liquid. You could sell them and close it out to others in the secondary market. So there are ways to kind of like exit. I will say that there are other alternatives. You could just get an ETF that invests in short-term bonds that yield roughly the same as a high yield savings account. And that's one alternative that you can do. So, or you can even
But again,
invest.
like the rates aren't like drastically different, right?
They're not. They're all roughly the same. They're all
Like
5%.
just like pick one and get over it. You know what I mean? Like move on. I
Exactly.
get messages all the time. People are like, "Oh, I just got SoFi because you were talking about it, but now Wealthfront's giving like 0.5." I'm like, just
No,
relax.
don't. Yeah,
Like
yeah.
you're fine. Just leave it. Focus on other other aspects of your financial situation. Increase your income, right? Job hop, get a promotion, go learn some skills. Like that's more
This
important.
is why I don't like go to like, what do you call this? Different high yield savings account, because they'll change it based off of what the market rates are. I
Yeah.
prefer those the tradable assets, just because I know like, oh, I can get out if, like, sure, there's like price risk, but I'm okay with the price risk. I know how short
Really?
term bonds are going to perform.
Oh, okay.
They're close to maturity. They're not going to lose a lot of principal. So, but
Gotcha.
yeah.
Oh, what else? Y'all got any questions in the chat? Been pretty quiet. You got anything?
So
I
someone
don't have
asked.
too many.
Sorry.
I don't have any, so y'all go ahead.
So someone asked what my thoughts are on the best AI play, and I don't know. Well, the one that's currently out and about is Nvidia, right? But I don't invest in Nvidia, and the reason why is because it's expensive. It sells at a 200x multiple on their free cash flow, so I don't touch anything with that crazy multiple. And the reason why it's trading at such an expensive price is because they kind of forecasted that their revenues are growing at a rapid rate. Like, I think it's like a 60% growth due to AI. So, it's too fast for me, too expensive, really. I don't mind fast growth, but I do mind expensive. Like I pay attention to the multiple that I pay, and
You think they're overvalued?
Hmm?
You think they're overvalued right now?
Yes, because again, like an enterprise value to FCF multiple of 200x, that's what they're currently trading for based off the last 12 months of free cash flow. But
Can you break that down? I don't know what that means. Can you break that?
enterprise value is basically the takeover price of a company. It's the market cap. Then you add the debt because you're taking on that debt once you acquire the company, and then you subtract your cash. So that's enterprise value. Free cash flow, it's basically operating cash flow minus capex, which is kind of like net income, but it's focused on the actual cash entering your bank account from operations minus the cost of you investing in plant equipment, capex essentially. And then you take a multiple of that, and the multiple for the last 12 months for NVIDIA is like 200x, which is way higher than the average multiple for companies that I follow that are consistent. Most of the companies that I follow do not exceed 30x. So for something to trade 200x, it's extremely overvalued. And then someone said NVIDIA has excessive growth. I don't really like to talk about individual stocks, but I am totally okay with bashing some stocks every now and then. So I don't like recommending stocks, but I'm okay with bashing them. So
What people sort of obsess over. Sorry, go ahead.
I do find odd too that for a while so many people are giving Kathy Wood so much flack on her NVIDIA evaluation and outlook. And it's like I understand why she's sold. Sure, she missed that crazy bump, but it's the risk evaluation and the growth potential. Like I just didn't see it. Plus, her interest, like when she entered her position, was like 2015, 17. So it's kind of a whole different metric of when you entered versus when you're trying to project these crazy outlooks and if they're going to come to fruition.
I saw a clip on TikTok. I don't normally follow what she says because I think that people who invest in those kinds of companies, they're gamblers. They don't really know what the future, like they're just trying to predict what the future is. And I don't like it because it's less, but I saw TikTok. Anyways, the bottom line is I saw a TikTok where she gave her idea on AI. She wanted to go into the hardware space, and her reasoning was it's better to go in the software if you're trying to go for something. If NVIDIA makes $1 in the hardware space, then the software people are going to make 10x that. So that I don't know if it's 10x, but it was like that was her reasoning, and makes sense. But I don't really follow it.
Software is easy. Here's the thing, guys. Hardware is hard. Like hardware is extremely difficult.
Mm-hmm.
But software, you can come in instantly and grab some market share. But when it comes to hardware is extremely difficult to capitalize on.
Is NVIDIA even hardware though? They're design. They hire prefab people to manufacture it, like TSM. So TSM manufactures it, but they just create the design. So it's not really hardware. So I don't know what she's talking about. Like, what exactly does she mean by hardware? I don't think they take the risk of hardware. Although,
well, hardware in the sense of integrators.
Yeah, they do have a good amount of servers and stuff too, if that's what she's talking about. But
they have 3 business segments. It's data, gaming, and the other one is automotive, cars. I think the car one is obvious. They're working with Tesla. They're the only ones out there. The gaming one, it recently fell like 40%, and the reason why I think is because I think in the last year or two it went up because people were trying to buy them for crypto mining, and that it's just not popular to do crypto mining anymore. And the other one is the data centers, which I think AI is built into that. So and the car one and the data centers are doing well. It's just the gaming one that's down 40%.
Those damn graphics cards. And they're so expensive.
Whoa, that's a good. But guys, I actually have to book it. My cousin has been here patiently. We're gonna run some Brawl Stars.
Yeah.
Do you guys play Brawl Stars by any chance?
No.
Oh.
What is that?
What's the platform
Hmm?
for what was the game you were saying? World Stars?
Brawl Stars. Brawl Stars.
Brawl-
It's a game on your phone. Oh, but yeah, we're probably gonna run a few of those. I have some cooked lasagna that I'm ready to chow down to.
Nice. All right, man. It's good talking with you.
Yeah.
Take it
No, I
easy.
appreciate
It was
you
fun.
coming on.
Yeah, it's fun chatting with you guys.
Yeah, we'll do it again. Next time we'll have maybe a specific topic in mind and we'll go at it.
Yeah. When you guys go live, do you guys usually have a specific topic in mind? Sorry, last question. You do?
Yeah, I probably have a specific topic and like something on screen so people can, ask questions and we can talk about it.
I see.
Yeah.
Strategy over how to get big on TikTok is usually something that's top of mind. I don't know how. I don't know. I'm terrible at strategizing apparently, but I have a scammer that copies my content and he has more followers than me. It's crazy.
Oh my gosh.
But anyways, I'll let you guys go.
All right, man.
All right.
Have a good one.
Take it easy.
Let's see. CJ says that industry specific or all companies? So do you remember when Nerd was talking about that 200x for NVIDIA? I forget what metric that was. Was that specific to an industry or was that all companies in general? Like the average he was saying was around 30. Do you remember?
Yeah, no, it's more specific to like your AI technology sector.
Okay. Let's see. Dylan says, hello from Maine. Had a question about a couple things finance. Yeah, what's up? About real estate? Ooh, I'm not a real estate person, Dylan. But if you want to ask it, we can try and chat about it for a little bit. We can do another 5 minutes of Q&A and then I'm going to do some editing and get ready for this other stream. What's going on, Samuel? Oh, Frank. What's going on, Frank? How's full-time content creation? It is a grind. It's definitely a grind. It's hard to not sell courses.
Yeah.
I get why everyone's selling courses because that's how you make money. But with the economy, marketing budgets are down. That means brand deals are down. Not missing dev. Honestly, I am getting the itch to write some code, Frank. So if you're hiring for a part-time developer, give me a call. Let's see. Dylan says, so I am purchasing my grandparents' property with house, and I have the chance to sell my house. Is there more to that question?
So is he trying to sell his house to acquire their house, maybe?
Let's see. Oh, I see another question here. So I'm purchasing my grandparents' property with house, and I have the chance to sell my house, which I owe 135 on, for 450, and could potentially move there for no mortgage. All right, nerd. Appreciate that. Have a good one. Oh, Frank, Frank has a fire date, May 2024. Dude, that's awesome. That's coming up. It's coming up real soon. That's awesome. Front end, no. I can't stand HTML, CSS, React. Okay. Let's see if we can analyze this question a little bit. So how much is your grandparents' property? And so are you thinking you can sell your property which you owe 135 on, but you can sell it for 450.
I mean, I don't know how much debt he has, but if he owns his house and is looking to buy the grandparents, the bank will probably use his as collateral if he
Looks
wants to
like
go that route.
looks like he owes 135-ish on his place.
Hmm.
Potentially rent the other property. Is there an advantage to this over becoming mortgage free? Risk. So if you're going to rent out your previous property, risk. And does it cash flow? Does it cash flow? And then risk. Risk would be, I mean, Jonathan, you manage a property. What are some risks?
Yeah, I mean, if the main things are, if you're trying to rent it out, like tenants, getting people in it, you're paying utilities and other things while it's vacant. Same with taxes, all that while it's vacant. And then the main thing is your bank, if you're doing a fixed or variable rate, that it'll change based on how you structure your loan.
Frank's asking, what's the rate on the home? Dylan says needs like another 100K in work.
Hmm.
What's going on, British monk? Another good question, or another good point or question that Frank's asking. What's the cash flow after you take over your grandparents? Yeah, it sounds like you'll have to sit down and do some analysis, do some research, do some calculations.
Yeah, I mean, especially too, so I have no metrics for them, but the size of the house too is very important for like anything we do wouldn't go anything above 3 bed, 2 bath, because that becomes difficult to rent out.
Let me see if I can invite this person. We can talk about it really quick. How do I do this?
You should have a guest thing.
Is it the host button plus host?
The host one is like he would have to go live.
Oh, I
But
see.
if you invite a guest, it should just be if he has 1,000 followers, he should be able to come up.
Oh. Yeah, I don't think it's. Can you request to join, Dylan? I don't see anything on my end. Anyways, yeah, lots of we have a saying in engineering. There are no solutions. There are only trade-offs. So people ask me all the time, "Hey, what's the best investment? What's the best investment?" It's like one of the most asked
Yeah.
questions I get. There is none. If you choose real estate, there are trade-offs. If you choose stocks, there are trade-offs.
Yeah, no, I think that's a great way to look at everything is don't approach it from like a pros and cons, approach it from a alphas and deltas. So like for example, I know this isn't a great political example, but take climate change. You know, people build turbines for wind turbine for electricity, but has that changed the air patterns and the bird migration and what the birds eat? So food income. But it's those kind of things that it's not necessarily good or bad. It's just how you want to approach it.
Yeah, what are you willing to live with? Frank says it's a math problem. Do some calculations. Absolutely. And just figure out what your goals are. Like, what do you want to do? What are your goals? That's the most important. Do you not want to have a mortgage? Do you want cash flow? That should help a lot. What's going on, Sniper? Do I remember you? Your name doesn't look familiar. Neither does your profile picture. Did you change those? That's how I keep track. Frank says option 1, sell and use the money to buy the house. Option 2, keep the current house and buy. Yep. Sounds about right. Cool. All right, guys, I got to hop off. I got to finish editing some videos, and then I'm going to go live on my gaming channel.
All right, Imran. Yeah, sorry about the mix-up. I don't know. I think next time I'll probably just do the guest boxes. That's probably easier.
Okay. Yeah, and then we can get together and pick a topic, and you can have it maybe on your background or something. That way, people come in, they know exactly what we're talking about.
Right.
Awesome.
Well,
All right, I'll talk to y'all later. Frank, good to hear from you. Happy you have a fire date. I'll hit you up next time I'm in Bellevue. Not sure when, but we'll make it happen. We'll get some boba. Alrighty, talk to y'all later. Have a good rest of your weekend.
Cool. So I'm gonna wait a little second, see if any of the other guests hop on, but I think that's probably gonna be it for the live, unless y'all have any questions. Oh, hey, Dylan. So yeah, I'll try and get some feedback. What way y'all think would be easier on y'all's end? For if I do more lives, would it be easier to, like Imran does, have a topic in the, like my background, and then we discuss it, or? No, completely understand though. It's worse than Twitter. I don't even think you get 180 characters. Well, I appreciate everyone coming on. I think I'm going to end it. Unless anyone has any questions. All right. No, I appreciate y'all staying on, and if you want, I'm doing this again tomorrow at 10 a.m. and 7 p.m. So feel free to join. If not, that's cool. But either way, have a great weekend.